Hello, and welcome back to the post-market analysis. What a day it was. We started the morning with a flat to positive expectation, and Nifty certainly delivered volatility, closing today at 25,966.05 with a gain of 0.66%. Our key question this morning was, will Nifty sustain above the psychological 26,000 mark, or will the R1 level act as a stiff wall? Today's session provided the answer. Nifty's daily high was 26,005.95, showing a clear test of that 26k level, but ultimately failing to hold our crucial R1 at 26,056. This level proved to be the day's ceiling. Let's dive deep into the price action to see what this means for the coming week. The morning action, pivot 25,974 or R 26,056 defense. Let's break down the chart. The morning session saw Nifty open at 25,843.20 and immediately rally towards our central pivot point at 25,974, as shown in the chart. This pivot acted as a springboard, fueling the push to the day's high of 26,005.95. Notice the price action from 9:45 am to 10:30 am. The bulls were aggressive, but the resistance at the 26k zone was significant. The price attempted to breach the psychological 26,000 level, but the volume dried up right near our R1 level of 26,056, leading to a sharp reversal. The takeaway here is crucial. R1 is now a proven strong short-term resistance that needs a strong catalyst to break. The midday drift or S1 25,881 strength. After the morning high, the market drifted into a correctional phase. This pullback was a critical test of our downside strategy. The price fell, but look where it stopped. The day's low was 25,827. This is just shy of our S1 at 25,881. The fact that the bears could not drag the index below the S1 zone, which we identified as the first crucial support, demonstrates underlying buying interest at lower levels. This confirms the buy on dips sentiment is still active, validating our initial flat to positive bias, even though the final close was modest. The index essentially traded in a range defined by the high. The support was stronger than the resistance. Sectoral drivers or global context. So, who drove this action? The biggest contributors today were heavyweights like Reliance Industries Limited, JOR 2.24% and Bharti Airtel JOR 2.50%. The IT and financial sectors, which often lead on breakout days, showed mixed performance. For example, some large banks were relatively flat or slightly negative. This uneven participation is the main reason we couldn't conquer R1 decisively. Globally, the mixed cues we discussed this morning are still in play, meaning a major upside breakout will require concerted buying from FIIs, which we didn't see today. The roadmap, next targets or stop losses. Looking ahead to the next session, the range is now clearly defined. The bullish case, next target, we need a strong 15-minute candle close above 26,056 R1. If this happens, our next target is R2 at 26,114 and then the primary target of R3 at 26,172. This is the breakout zone for a significant move. The bearish case, danger zone, any sustained trade below 25,881 S1 must be treated as a breakdown, potentially leading to a test of S2 at 25,791. This S1 level is your new crucial stop loss for any swing positions. The key observation, the market has rejected the upside at R1 but defended the downside at S1. We are currently in a consolidation phase leading into the weekly expiry. Finally, coming to conclusion or call to action, my final verdict is that Nifty is exhibiting strong resilience but is lacking the conviction for a massive rally right now. Prepare for a choppy session tomorrow, with tight risk management being absolutely paramount. Trade the defined levels of R1 and S1 and avoid getting trapped in the middle. If you found this analysis helpful, please hit the like button, subscribe for daily pre- and post-market videos, and let me know in the comments below. Do you think Nifty will finally break R1 26,056 tomorrow?